Hey everyone, this is Jordan at Pure Elliott Wave here with your update for the euro dollar for April 21st, 2023. This was an exciting week. That dark cloud cover we saw last week was confirmed by subsequent bearish price action, as was the ending diagonal alternate wave count. So that is now currently the main wave count. So minor wave C of the expanding flat is expected to continue downward as a motive structure. We also have a target zone for that price at 1.0179 to 0.99505. I also have an alternate if price breaks above 1.10906, and that would be intermediate wave 2 being complete and then intermediate wave 3 continuing upwards. So with that being said, let's look at the charts and get a little more info on this. On the weekly chart, we can see the previous bear market that ended in September 2022, and the motive structure we've labeled as intermediate 1 going into intermediate 2 to the upside. If you go to pureelliottwave.com and pull up this analysis, you can click on the link with our recent monthly chart analysis and the reasons for labeling this as the bottom right here. Supercycle wave C is expected to unfold as part of this larger triangle, which supercycle B just completed that leg. So we're expecting a zigzag for supercycle wave C, which will be composed of cycle wave A, and within cycle wave A that will be a motive structure, which primary 1 is a part of here. So within primary 1, we have intermediate 1 going down into intermediate 2, and intermediate 2 unfolding as an expanded flat A, B, C, where wave B must retrace at least 105% of minor wave A, and it has reached 107%. So let's zoom in a little on this wave count, and I'll show you our invalidation right above, below, our targets for minor wave C on the daily chart. So this is the daily chart. You can see intermediate 1 complete above, and B we just had labeled B as complete with minute C ending as an ending contracting diagonal. The invalidation above at 1.10906 is calculated based off of the ending contracting diagonal. And in order for this structure to meet Elliott wave rules, 1 must be the longest wave, 3 must be shorter than 1, and 5 must be shorter than 3. So each wave is contracting in its length, including wave 4 is shorter than 2. So at this level, wave 5 would be longer than 3. So that is our invalidation. And if that level gets breached, I have an alternate wave count to show you, which would expect this intermediate 2 is actually complete right here. The best fit channel has been drawn around all of the previous upward trend movement. So we could have a really strong confirmation that this minor C is commencing when we breach this channel, and a price target for minor C is calculated at a 1.618 length of minor A, which is common for an expanding flat, or for the 618 retracement of intermediate wave 1. So that gives us a zone of 1.1079 to 0.99505. The invalidation for all of this bullish movement is if any wave moves beyond the start of intermediate wave 1 at 0.95364. Let's move to the hourly chart, where we'll focus on this area right here. So earlier this week we had a little bit of downward movement as the wave count expected, confirming that ending diagonal, and the rest of the week we just moved basically sideways, which was a correction from this impulse at minute 1 for minute 2. Now this correction, I've labeled it as an A, B, C zigzag, with A as a 5 wave Motive structure, B as a complex W, X, Y, and C as an ending contracting diagonal. So with this wave count, next week we are expecting further downward movement. Invalidation sits, you can see just how close above it is at 1.10906. So keep an eye on that level. This best fit channel coincides with the channel from the ending contracting diagonal. So if we did see a breach of that channel, that would be potentially a bearish signal. Now we're going to move on to the alternate weekly chart, which is if price breaks over this level here. For the alternate weekly chart, you can see price declining, reaching the bottom here in September 2022, and then we can see our familiar intermediate 1 and 2. The difference with this chart is that intermediate 2 has been labeled complete as a zigzag A, B, C, and the overlapping impulse to the upside labeled minor 1, 2, and you can see much more overlapping here, shows that minor 3 is extending. This is a very bullish wave count. With minor wave 1 and 2 possibly completed here and here, we can calculate a target for minor 3, which has been calculated as 2.618, the length of minor wave 1. This gives us a little bit of room to break out of these 1, 2, 1, 2, 1, 2 waves and still give us enough room for minor wave 4 to pull back. So that gives us a shorter range target of 1.17947, and then a target has been calculated for intermediate wave 3 going up here to reach 1.618, the length of intermediate wave 1. That would happen at around 1.29378. On the daily chart, we're going to pick up from this area here and show this impulse with intermediate 2 going into intermediate 3, so picking up from here. This is the alternate wave count for the daily chart. You can see we have our best fit channel encompassing all upward movement for intermediate 1, and we have intermediate wave 2 being labeled complete down here as A, B, and C zigzag. Now this wave count is a little odd because wave C, while it does subdivide nicely as a 5-wave structure, didn't really deepen the correction much. So while this wave count doesn't break any rules, just looks a little off. So we have A, 1, 2, 3, 4, 5, B expanding flat, A, B, C, and then C as a 5-wave structure inside of this candle. Then we have intermediate wave 3 unfolding as an impulse with minor 1, 2, minute 1, 2, minuet 1, 2, and then sub-minuet 1, 2. So an extension being formed to the upside. The invalidation sits just below at 1.05169. At that level, any wave cannot move beyond the start of minor wave 1. On the hourly chart, we'll pick up from the end of minuet 2 into this structure for sub-minuet 1 and 2. On the hourly chart, picking up from the bottom of minuet 2, we have a pretty clean impulse for sub-minuet 1, and then for sub-minuet 2, very complicated sideways structure. I've labeled this as a WXY double combination, which microwave W subdivides as a zigzag A, B, C. Microwave X subdivides as a zigzag A, B, C. And then microwave Y with all this overlapping price action. I have this labeled as submicro A, B, C. Complex zigzag for wave D. And then submicro E expected to go down a bit further before we continue the impulse upwards. So over the next week, keep an eye on the confirmation level above and the best fit channel, which encompassed all of the previous bullish price action. Now we're going to move to the weekly technical analysis. This is the volume data for the weekly chart. You can see overall we've had a severe decrease in longer term volume and also a decrease in shorter term volume. Week over week we have a very slight increase with the consolidating price action. Money flow is neutral, and on balance volume broke out of this technically weak range, so we wouldn't classify that as a major bullish signal. On this chart, I'd give more weight to the declining volume supporting the bearish Elliott wave count. For other weekly technical indicators, you can see the last weekly candlestick ended as a hanging man, and when a hanging man appears in an upward trend, that is a strong reversal pattern. Resistance overhead sits at 1.117 and 1.140, so some decent resistance overhead and support underneath at 1.050. The 200-day moving average is upward sloping. ADX indicates a bullish trend that has not yet reached extreme. If the ADX line on the weekly chart did reach over the positive DX line, which is this green line, then that trend would be considered extreme. RSI is neutral, stochastics are entering overbought, a little bit more room to go there, and ATR is overall flat in the past couple weeks. For the daily volume data, volume has been flat over the past 10 or so days. Money flow is currently neutral, and on balance volume is currently trading within this decent range, with the bottom line having about 4 to 5 tests and the top line having 2 tests. If we did see a breach swiftly below this purple line, that could be a bearish signal. So we'll keep an eye on that over the next week. For other daily technical indicators, we had the previous dark cloud cover with a follow through, and since then been kind of consolidating in this area with no new candlestick pattern. Resistance overhead, as previously mentioned, sits above, and support kind of a long ways off. So if the Elliott wave count was right for that main wave count, then we could see kind of a sharp free fall until we get to the support area. Moving averages are overall bullish, with the shortest 13-day moving average upward sloping, and the 50-day also upward sloping above the 200-day moving average. The bullish ADX trend is now reaching extreme over the positive DX line. RSI also between these two peaks right here. RSI made a lower high, so there's a slight bearish RSI divergence between the two peaks here. Stochastics are leaving overbought, and overall ATR is declining as price moves higher. We can see the decline here and the increase in price. Volatility is decreasing with upward movement. Overall, the combination of the dark cloud cover, the upward trend reaching extreme on ADX, the divergence between RSI and price, stochastics leaving overbought, and volatility decreasing to the upside, I would say this chart does support the main Elliott wave count of more downward price action to come. This has been Jordan Marshall with Pure Elliott Wave. Thanks for watching.